Hello everybody, my name is Lush Eisen and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record a video per week, so make sure you ring the notification bell to get notified each time one comes out. Rocco had a question about entry and exit for stocks. He's asking about how much and when to buy and what to do if the stock goes up or down. Buying strategies initially depend on whether you think the stock will go down some more, in which case you buy in thirds, getting better value as the stock comes down. And if it just goes up, at least you bought something to have it go up. I never let a single stock be or get to more than 5% of my portfolio. I've done a video recently about the important stock metrics I look at, so I would make sure the stock metrics are being met by the stock and continue to be met. Buying I find far easier than selling, as do many investors. As my position grows, I try to sell a third once it doubles and another third as it doubles again. After that, I got more than my money out and I am now playing with the house's money and I let that ride, not to use a gambling term. If a stock goes down initially or later, it's always about whether you believe the quote unquote story still. If yes, buy more since it's on sale. Otherwise, put in a stop loss and sell it if it is doing badly and won't recover, or the story has changed significantly and you no longer believe in the stock. Then you can allocate the money to something better. Theoretically, the stock I own should always meet and beat the metrics I'm using to buy stock, or I should be selling the stock that I own. Here are some common reasons why investors might choose to sell a stock. Number one, achieving financial goals. If the stock has appreciated and you need the funds for specific financial goals, such as buying a house, paying for education or retirement, selling might make sense. Number two, valuation concerns. If the stock has become overvalued compared to its earnings, growth potential, or industry peers, it might be a good time to take profits, as I mentioned earlier, since the stock has obviously had a nice run up. The cliche is no one ever lost money taking a profit. However, if you buy near the top and you have to hold an overpriced stock to make any money, you need to adjust your metrics and not buy overpriced stocks. Number three, change in fundamentals. If there are significant negative changes in the company's fundamentals, such as declining revenues, profit margins, or a shift in management that impacts the business outlook, review the stock and consider selling. These fundamentals would be the metrics I mentioned earlier. Number four, better investment opportunities. If you find another investment with better growth potential, risk reward profile, or alignment with your investing strategy, consider selling the earlier investment. Everything is always worth what the market is willing to pay for it. So if you think there's an investment that can make you a better return than the one you currently own, dispassionately sell this one for whatever it is worth and buy the better ROI investment. It's just money. Don't turn selling an underperforming or bad investment into an attack on your ego. Number five, diversification. To rebalance your portfolio and reduce risk by diversifying into other asset classes or sectors, and to avoid going over the 5% weighing in your portfolio. Number six, tax reasons. To realize capital gains or losses for tax purposes, especially if it can offset other gains or optimize your tax situation. Capital loss selling that happens in December lets you take advantage of the reality that the stock has gone down. Especially if you think it will continue to go down, sell it, get the tax loss benefit, reinvest the money elsewhere, and worry about the capital gains later when that stock goes up. Delaying paying taxes is a great benefit. Number seven, personal risk tolerance. If the stock has become too volatile or you are no longer comfortable with the risk level it represents in your portfolio. Number eight, dividend changes. If the company cuts or eliminates its dividend, which might signal underlying financial issues or a change in corporate strategy that no longer aligns with your investment goals, consider selling. Number nine, market conditions. Economic indicators or market trends that suggest a potential downturn or sector-specific challenges might be a reason to sell. And finally, number 10, avoid emotional decisions. If holding the stock is causing you undue stress or emotional strain, prevents you from sleeping at night, it might be healthier to sell and move on. It is essential to review your investment thesis regularly and make sure that the reason you initially bought the stock still holds. Making informed decisions based on well thought out strategies can help you achieve your financial goals. Selling allows you to spend your money as well or invest it better elsewhere. We'll take a look at some psychological and mindset aspects of owning stocks. Avoid waiting for a stock to go back to where you bought it so you don't lose money and feel bad. Doesn't matter whether you are up or down in a stock, since no one cares where you started other than the CRA for tax purposes, and whether to charge you taxes on capital gains or let you write off capital losses in a non-registered account. Everything is worth what it is trading for at the time, and what you paid for it doesn't matter at all. So if you were wrong, sell and allocate the capital where it will do most good, rather than wanting to not feel dumb and stick to a loser. Another way of thinking about it is to pretend you don't have it. If you bought it right now, would you expect it to go to where you originally bought it? If not, don't expect something to come back to where you bought it. If you think a stock will go down, pull out and sell. If you think it will go up, stay invested and buy more if you can. I always ask myself, would I buy this investment today, even if I didn't own it? If yes, buy more. If no, sell it. The fact that you own it makes no difference in a decision, because you're owning it makes no difference in what the stock will do, and the trading commissions are zero or tiny, so those should not stop you from selling. People usually don't want to sell when they're down because they don't want to feel stupid for the wrong decision, but they should consider things dispassionately. Use whatever the investment is worth in the best way possible. So if you think you can get a better return elsewhere, sell it for whatever you can and reallocate the money for a better return elsewhere. These are my views on buying and selling. Feel free to add your criteria in the comments. If you have any requests on what you'd like me to cover in future videos, please put that in the comment section. If you'd like to get in touch, please reach out on any of these social media channels, and may you have a profitable day.